Let's bring in Marc Sumerlin, Evenflow macro managing partner, and Steve Moore, Unleash Prosperity co-founder and former Trump advisor. So, gentlemen, remember the days, it wasn't too long ago, when during the Biden inflationary period, the media was saying everything was great, despite the fact that the substantive facts, the data we were getting all showed it wasn't so great, that inflation wasn't just transitory, that investment wasn't drying up or was drying up, and they wouldn't admit about it. Now, with the exception of the weakening labor market, we've got strong growth, we've got continued lowering of inflation and consumer spending that's out the window. Steve Moore, why is the media getting this one wrong?
Yeah, isn't that the case where the bad news under Biden was actually portrayed as good news?
Yeah.
And the amazing news we see, look, I look at the economy right now, I'm just really optimistic about next year, David. And in fact, even just so far, the first 10 months have been pretty good. For the last 7 or 8 months, the economy's been growing at 4%. That's a blockbuster number. We're seeing all this investment capital come in the United States. You're right, inflation's at that, it should be a little bit lower, but it's a lot lower than it was under Biden. And by the way, there's 7 million job openings in this country. So there are, for people with skills who have the skills that employers need, you can get a job in a week. Now, there are a lot of college graduates who may not have those kind of skills, and that tells you a lot about the value of a college education these days. But look, no, I think it's a really strong economy, and I think next year is going to be better when the tax cut kicks in for middle-class workers.
Well, and Mark, I shouldn't say all the media is saying this. There was a USA Today op-ed, I think it was in today's USA Today, and the writer said, quote, "I wonder if all the doom and gloom has been overblown." Well, guess what? It seems it has been. I mean, we got these Thanksgiving numbers were incredible, 44 billion. The Atlanta Fed just came out predicting a third quarter growth of 3.8%. Now, that was one tick lower than what was expected earlier, but apparently the shutdown cost the economy just 0.1%. That shows how strong it is. And inflation. We got those import numbers coming in basically flat on inflation. For all the talk about tariffs ginning up inflation, that hasn't happened. So it does seem for like a perfect time with the slower labor market to have a rate cut, no?
It is time for a rate cut. I mean, we've seen the unemployment rate just drifting up slowly, so the Fed has been too tight. And they've made a couple of cuts. I think they will go ahead and cut next week, and it's the right thing to do. It's in part a bridge to when the new tax bill takes effect on January 1st, and we'll be getting more support then. But I agree with you what you said on consumption spending. It's been strong. We haven't seen any sign of it weakening. We can see in corporate reports that keep coming out that businesses are strong. Yeah. And to put some of those layoffs in perspective, and so we see these headline numbers that sound kind of sensational for some job losses here and there. Every single month, 2.5 million people leave jobs in the labor market, and more than that get jobs, because we have a very dynamic U.S. economy, and so there's a lot of turnover. And so when you put those announcements in terms of just the normal movements of the labor market every month, they're actually quite small. And so I don't really take much alarm in that at all.
But Steve, there does seem to be a little bit of lag time. I mean, it takes a while to build a new factory. I mean, trillions of dollars coming in to build factories, but it does take a while to gin them up, to hire the people needed. Is that some of the lag time that we're in right now?
Well, let me just address this issue of affordability and dovetail what Mark was saying. I mean, if we have an affordability crisis, why is everybody out there spending so much money?
I know.
I mean, it's like such a contradiction.
And it's not just the consumer, it's the producers on investment in the future.
That's exactly right. And of course, we love to see investment. I'm with Larry Kudlow, that investment is the seed cord of a growing economy. So it's hard to see. And even look, it is true that the labor force is not growing like we'd like it to. But I don't know how Mark feels about this, but I think it's more of a supply problem of labor than it is a demand for labor. I mean, businesses are telling us that they want the skilled workers if they can find them.
Yeah. Well, and Mark, the fact is that these new factories, to get the workers, are going to have to offer them a lot of money as well. So it's going to be a well-paid labor force once they gin up to full production.
Yeah, I mean, if we look at the construction data, the last data we have is August, but it's been flat for 3 years. And I agree with Steve that next year should be better. And what we want to see is those construction numbers start to bend up.
Yes.
And I think that they will. But one of the important jobs the administration has for the next year is to implement all these deals and make sure that everyone is committed to. They've done the press release, and now we need to really have them focus on driving the follow-up.
By the way, Mark, the last time you were on Kudlow, I was looking back at some of your last visits here. You mentioned that lumber prices have come down.
Yeah.
Part of the reason, I think, is because of all the deregulation that's happening, and the future buyers of lumber are seeing some good times ahead too. I understand, of course, interest rates are a vital part of the reason why we have a shortage of houses on the market. But do you think with a lower lumber costs and lowering interest rates, speaking of affordability, we may be able to tackle the housing problem better?
Yeah, it's really interesting because we have done a pretty good job on apartments. And so we had a lot of new apartments come online this year, and we can see apartment prices are now falling 1% a year. That might not be felt immediately, but it will compound over time. And so we actually brought on supply, and it did exactly like Steve would expect it to. Prices have started to decelerate. We now need to follow through on the single-family home market. And that market is challenged in a lot of places with where you can build and where you can't build. But we've done it on apartments, so there's no reason we can't do it on homes.
Steve, then we have tariffs. And while you and I had to be dragged kicking and screaming into tariff country by Donald Trump, and I'm still not 100% there in terms of loving them the way he does, they have turned out to have a couple of advantages. One, of course, is the amount of money that we're raking in as a result of the tariffs. But there are still negatives. And that same USA Today piece that suggested there was too much gloomy news when you compare it to what's really happening, the author was down on tariffs. She said Trump's stubborn insistence that tariffs are the way to go is backfiring. More voters will keep transferring blame for high prices from Biden to Trump, and that could have a real impact on the 2026 midterms. So you've got a solution to that, which is not just to cut checks to people, which I was in favor of the first time I heard Trump talk about it, because it is old money that's coming into the system. It's not like the Fed is creating new money. That's the tariff revenue is coming from old money. However, it's better, you say, to give tax cuts to people. Explain your plan, which you wrote about with Art Laffer in the Journal.
Right. Now, Laffer is never wrong, right? And he's one of my best friends.
Almost never.
And look, I think that it's always a mistake. I disagree with you a little bit on this, because I never think it's a good idea for the federal government to just write checks and send checks out to people that's not tied to work. And so what we have recommended to Trump, and we've talked to him about this, he's open-minded to it, is why don't you, if you're going to do this, if you feel like you need to help the middle class a little bit, and I think the affordability crisis is overblown, then wouldn't it be better to cut people's payroll tax? Because at the margin, you'll have two effects, David. Number one, you'll give businesses an extra incentive to hire workers because their cost of hiring worker will be lower. And you'll give people on the sideline who are not working a little incentive to work either more or to get into the labor force because they have more money. So that was what we were saying. Come on, do this in a smart way if you're going to provide middle class tax relief. You know what?
Because reading that article thoroughly, you brought me over to your side. I'm for that instead of writing the checks now. I think that's the best way to go. It's a real work incentive as well as giving people the money that they deserve, that they own. I think they own that tariff money, the tariff revenues that come in. But it's better to put a work incentive in there at the same. By the way, Mark, do you have an opinion on this? Are you in favor of cutting checks or perhaps giving
I don't want to be the Scrooge. I'm a little bit against both, only because we've got a $250 billion tax cut about to take effect in the next 3 months.
Yeah.
And so I like a little bit of deficit reduction
I just don't
to go
trust,
with my tax cuts.
You know why I'm against that, Mark, is because I just don't trust the people inside the Beltway to use that money to pay down the debt. I just don't trust them. I want that money as quickly as possible to be put in the hands of American citizens rather than the people inside the Beltway. I have a prejudice against politicians. It's that simple. Marc and Steve, great to see you both. Thank you so much for being here. Appreciate it.